Yes, interesting topic today because it just gives a sense, that when stocks come into a zone where there are unfilled gaps, what happens to the stocks and what happens to those kind of charts. Now, gaps generally are, and as a basic phenomena, are points when stocks open with a gap up opening with respect to the previous day close, and then those gaps they generally don't get filled. And there are times, so this is an up gap, and same happens with a down gap when a stock opens below the previous day's low, and those gaps they generally don't fill. So I've looked at few examples over here just as a reference point that how and what happens when these unfilled gaps could probably impact on the stock price trend. So this is the charts, for example, for MGL. Now in the recent price trend, when the stock topped out at 2000 odd levels, we saw the first point when the stock formed a gap or a gap down pattern over here. Now this gap was not filled over the successive next few days. That led to the stock getting into a sharper correction. Then there was a second gap which was created for the stock at 1300 odd levels, and from there the stock fell by another at least 20-25% further, coming towards 1050 mark. So with these two unfilled gaps, these act as major resistance or barriers for the stock. If these gaps are not filled, then we expect the stock to get into a trend on the downside, since in this case it's a downward gap for the stock. We've looked at now the other side. What happens when stocks open with a positive gap, and then post that, do we see the stocks getting to a recovery? This is the charts for City Union Bank. In the last 1 month, we've seen a change of texture for the stock. So from earlier, the stock was going into a trend more on the sideways. Suddenly you see a point where the stock opens with a gap up opening. This gap is closer to 158, 60 mark for City Union Bank, and the gap has not been filled. What does this lead into? That the stock gets into a recovery, and from 160 levels, the stock is now on the verge of a breakout of the new highs or new fresh swing highs closer to that 180 mark. So once the gap doesn't get filled, even on the upside, the stock moves into a much more higher momentum trend on the upside. There's one more example over here, a very recent chart which is coming out in a very similar kind of a stance in terms of gap, and that's Bank of Baroda. The stock in the recent trend had fallen very sharply from 265 to almost 220 in a matter of few days. But now what we are seeing is a change of trend potentially for the stock. If this gap is not filled for the stock, we may expect the stock to behave in a very similar manner like City Union Bank did.
All right, that's the learning for today of unfilled gap. But Kunal, if I'm not wrong, just yesterday when there was a fall in the Nifty, were people discussing about some gaps over there, and was that filled or unfilled now?
Exactly. So even on the Nifty, there was a gap of I think around 200 points when we opened from 23,950. That was the low of the gap towards 24,100, 150 odd mark. So that gap is filled after yesterday's intraday correction, and because of that, there should be normalcy in the market. And when normalcy occurs, you don't expect wild gyrations or high volatile moves, and you expect the market breadth to slowly and steadily improve or get in favor of more of the advances. So I think what we are seeing today is a resultant of yesterday's price action where the gap was filled for the index.
If you like this video, then like, share and subscribe to ET Now.